Hello, everyone. Good morning or good afternoon, depending on where you are, and welcome. My name is Sophie Deyon. I'm the team lead on policy and government engagement at the Global Maritime Forum. And it's my great pleasure to host today's webinar on the implications of the outcome of the IMO MEPC 83 meeting that took place a few weeks ago. This is a very much awaited agreement, as all of you know, which led to the new IMO net zero framework, the so-called midterm measures, and it's a unique and critical milestone for the maritime sector as a whole and beyond, and where the 2023 strategy adopted by the IMO set a direction. Now we have agreed measures that mandate not only a fuel shift, but also put a price on global emissions from the shipping industry. And you, I'm sure, have had the time to look at different reactions. There has been a mixed welcome of this agreement. This is not a perfect one, but it is the result of very intense engagements across delegations and consultations with stakeholders in the value chain. And this is how, from the industry, we will move forward on the basis of a future more detailed policies still to come as well. Today's webinar is hosted by the Getting to Zero Coalition, which is an alliance of about 200 organizations, mostly made of companies across the maritime value chain. And the coalition is committed to getting commercially viable zero-emission vessels powered by zero-emission fuels into operation by 2030. So in the run-up to the IMO MEPC meeting, and before that to the strategy in 2023, the coalition has been engaging intensely on these topics and trying to push for high ambition at the IMO. And we did that by discussing with different industry stakeholders, gathering industry and public stakeholders together at public-private dialogues, and publishing regular analytical work fitting into the reflections of the policy debate. Today, we would like to focus, as I said before, on what has been agreed at MEPC 83, keeping in mind that this is still to be adopted formally later in October. And what some of the potential concrete implications are for the business representative that we will gather in this panel today. We'll start with a short presentation by our very own project manager at the Getting to Zero Coalition, Femke, in a moment to make sure that we start this discussion on common grounds and we take a minute to reflect on what the outcome contains. And then we'll have a discussion with our panel members, which I'm delighted to be joined by, who are representatives from companies who are also Getting to Zero Coalition members and represent different sides of the industry. We will have the pleasure to welcome a fuel producer, a ship owner, as well as a charterer representative. I encourage everyone to ask questions or put comments either on Zoom or on LinkedIn if you're following there, and we will try to do our best to monitor that, answer some of them during the webinar or take them afterwards, depending on how much time we have. The webinar is also being recorded, and you will be able to find it on LinkedIn later on. With that in mind, I will kick off by handing over to my colleague Femke to take us through what the outcome of MEPC 83 contains. Femke, over to you.
Great. Thank you so much. So MEPC 83. Kind of the question is, where are we today? We had the greenhouse gas strategy adopted in 2023, and now we have moved from a strategy to an actual regulatory framework that is binding and an actual kind of structure for vessels to comply with. And so what this means is that this sits under the MARPOL Convention, so the International Convention for the Prevention of Pollution from Ships. And it's an amendment to this MARPOL Convention, specifically an amendment to Annex 6, which is the prevention of air pollution from ships. And the amendment is largely made of the addition of Chapter 5, which is the net zero framework. And Chapter 5 is the chapter within Annex 6, within MARPOL, that houses these new binding regulations for the shipping sector. And so, what's actually been decided, and this is a bit of an overwhelming figure, but I'm sure many of you have seen versions of this already on LinkedIn in the last few weeks, because what's been decided is a so-called tiered global fuel standard. So a global fuel standard is a system that mandates the reductions of the greenhouse gas fuel intensity between now and eventually 2050, full decarbonization by 2050. And then based on that kind of mandated reduction, you can overcomply, undercomply, or perfectly comply. Now the system is a tiered global fuel standard, which means that it is a system with two different lines for the global fuel intensity reduction. So we have a baseline and we have a direct compliance line. So focusing on the direct compliance line, that is really kind of the line, the targets that ship owners or the vessels have to comply with in the upcoming year. So those are the targets that will, if you meet those targets, you will be able to comply with the regulation. If you are exactly on that line, if you're actually exactly meeting the targets for each year, you are perfectly complying with the regulation, but you can also be emitting less than the actual targets set out in the direct compliance, and that means that you are over complying with the regulation. So in this figure, if you're perfectly complying, you're a blue vessel, you don't need to do anything. If you are actually emitting less than the direct compliance line, you are over complying, so it's a green vessel. However, you can also not meet those targets, so you can be under complying. In this system, under compliance is divided into two different types of under compliance. So you have the tier 1 under compliance, that's in this figure, the orange middle band. And if you're in this tier 1 under compliance zone, you are emitting more than the direct compliance line, but still less than the base targets. And you can also be in the tier 2 under compliance area, which means that in this case you are a red vessel, which means that this vessel is emitting more than both the direct and the baseline targets. So quite many different options on where you as a vessel can be in comparison to these different targets and these different lines that are being set. And where you are in comparison to these different lines also makes a big difference in terms of what you need to pay and what you possibly can receive as well from the IMO. This system is based on, it's kind of combined with credit trading system, with the credit trading system. So that means that depending on where you are in comparison to these lines, you're either creating a deficit if you're under complying, or you're creating a surplus if you're over complying. And to make it easier for the under complying vessels to still comply with the regulation, even if they're not actually doing this through a fuel shift, is by allowing these vessels to swap their surplus and deficit, and so together kind of make compliant vessels. In this system, the green vessel is generating the surplus units that you can either bank for yourself for 2 years and keep in those or use in those 2 years. It can also be voluntarily cancelled out. So you basically pay for those extra for those different fuels. You have less emissions and nothing really happens. You just cancel out your surplus. Or you can sell your surplus units to a red vessel, so to a vessel that is under the baseline. So if you're a red vessel, you have multiple options. You can either find and buy those surplus units from the green vessels, or you pay a remedial unit for the kind of based on your actual deficit of $380 per ton of CO2 directly to the IMO. Once you've done that, once you've bought your surplus units or your remedial units of that higher level, you move from the red area to the orange area. So you move from tier 2 to tier 1. Then from here on, you can comply, you can kind of move onto the direct compliance line by buying remedial units. So if you're in tier 1, the only option that you have is to actually buy the remedial units from the IMO. And once you've done that, once you've compensated for your deficit, you become a blue vessel, you become a compliant vessel. So quite a complicated structure with a lot of ifs and buts, and also a lot of kind of details that are still not decided, but we'll go into that a little bit later. But this is really kind of the overall framework of how this is going to work. So I'm not going to go through all of these numbers, but the actual regulatory framework has already decided on targets for every year between 2028 to 2035, as well as already set the base trajectory for 2040. It's still to be decided what the direct compliance line is for 2040, in that year, but it's kind of relatively easy to kind of guess based on the system. It's likely to be around between like 75 and 80% based on the kind of the distance between the lines for the years above. And so, as I mentioned, I'm not going to go into these numbers, but what we do see here is that it's actually quite a steep reduction. These targets do go quite far, and they do really significantly mandate a fuel shift. And then there's also the question of kind of, you know, what the role of energy efficiency is here. And because this is a global fuel standard, so it's really mandating kind of the actual greenhouse gas intensity of the fuels, the role of energy efficiency is a little bit limited. It doesn't really help you and do anything for you to comply to energy efficiencies. You really do need a fuel shift. But the formula is set up in such a way that by reducing your total energy consumption, you can actually reduce the total deficit that you have in comparison to the lines. And therefore, you're actually decreasing the amount of penalties that you may have to pay in the end. So then another critical aspect of the regulatory framework is the definition of zero and near zero emission fuels, which was something that was started in the 2023 greenhouse gas strategy in terms of an ambition to have 5 striving for 10% uptake of zero and near zero emission fuels by 2030. But it wasn't really defined up until now what these fuels are, what this actually means. And now in this system, the definition of zero and near zero emission fuels has been made. And they are defined on their greenhouse gas intensity based on a well-to-wake reference point. So the 2 criteria have been set, which is from today to 2035. The threshold for a zero near zero emission fuel is 19 grams of CO2 equivalent per megajoule. And then from 2035 onwards, it becomes more stringent and it moves from 19 to 14 grams of CO2 equivalent. We know that, and that is already really helpful for the industry to have a better definition of zero near zero emission fuels. But it's still really kind of hinging on quite a lot of things because we don't really still know exactly what this means for the different fuels, because the IMO is also developing the life cycle analysis or assessment guidelines, the LCA guidelines, which are going to be really critical and which are going to set those well-to-wake emission factors for the different fuels. And so they're going to be really critical to know which fuels will be eligible and which ones are likely not to be. Then the zero and near zero emission fuel definition is also linked to the reward mechanism. Because as you can see in the little figure, there's also a reward mechanism that's going from the IMO central fund that will be paid out to fuels using zero and near zero emission fuels. And that will be based on this definition on these eligible fuels, but the actual mechanism in itself and the level of the rewards, we still don't know, and that will be defined in the coming years before the entry into force and before the actual kind of reporting and the surface trading and the credit trading starts. So then that kind of leads us to then what else still needs to be decided, and the answer is quite a lot still. We do have more clarity on what the framework is going to be or what it actually is. We have an understanding of the actual concrete measure architecture, but there's still quite a lot of details that are really quite critical for industry to make their investment decisions. And that includes, as I mentioned, the LCA guidelines. It also includes guidelines on the actual revenue disbursement. So we have a rough idea of the areas where the money is going to go to, but we still don't know what actually means, how that's going to be decided, how much of the money is going to be spent there. That includes also the reward mechanism in itself, as well as the element of just an equitable transition. And that's something that was also included in the 2023 greenhouse gas strategy, to have the objective to not only enable a fuel shift and an energy transition, but to also ensure a just and equitable transition. And so a lot of the revenue that will be going into the central fund will be required to support and enable a just and equitable transition. That includes, for example, support for developing countries in different ways for their transition, to make sure they're not left behind and to offset any disproportionate negative impacts that the measures and the transition may have on developing states. And then another key guidelines, I mean, there's more than just these, but I just highlighted 4 kind of key ones. But the last one is the calculation of the global fuel intensity and the registry and how the kind of those payments will work. And so the IMO has now decided on different dates on when it's going to work on these different open questions. So first, in October, we have the adoption of the measures coming up. Right now, the measures are only agreed, but they need to be actually formally adopted, which will be done at at MEPC 83 extra session for this, and then that will move into an intersessional working group of greenhouse gas emissions in October, and it will continue next year. And these sessions are really set out to develop the guidelines further. And then my final slide, kind of going more in from the kind of technical details of the measures to a bit more kind of the juicy stuff in terms of the implications of the fuel transition. And the answer is well, we don't really know very much yet. We do have more clarity on the structure, but there's a lot of details that are key to make the business cases for the different fuels work, and those will need to be decided going forward. However, when we're looking at 2040, we do know quite a few things that are going to help us make some investment decisions already today. Because when companies are looking for the technology pathway, they have some key considerations to take. And the first one is really around the scalability and the greenhouse gas reduction potential of the different fuels. So when we're looking ahead of 2040, the targets are going to be so stringent. There are very, very few fuels will actually be able to get you to comply with those targets. And what this means is that, we'll have likely e-fuels and biofuels that will be able to get you to comply with the targets in 2040. But then scalability will also be an issue. And there you might run into scalability constraints for biofuels. But then there's also the question of cost competitiveness and risks commitments for these different fuels. Whether you're able as a company to commit to long-term offtake agreements for e-fuels, or whether you're not able to take that risk maybe as a smaller company, but also what the cost differences look like now in 2030, but also in 2040, assuming that the prices of, for example, remedial units will be different and the rewards might look different then as well. There are also questions around, availability of fuels, bunkering, the actual value of the ship going forward. When you make your investments today, changes that you need to be making to your vessel design, potential retrofits that you need to plan and book for the coming years. But then there are also different compliance strategies for ship owners to consider. So, for example, whether there are different routes to deploy your zero-emission vessels on, especially now that FuelEU Maritime is here as well, and has a similar system but with different targets and with slightly different details. That might actually have a big impact on the decision on where to deploy your zero-emission vessels. There are also considerations around banking, selling your credits, potential use of new and innovative commercial structures, rather than kind of focusing on the structures that we're used to, that we've been using in the last decades. Now that we have a very new form of shipping coming up, that might also require new commercial structures going forward, but also tools such as book and claim going forward, or whether you want to look into diversifying your fleet for different technologies. So while we don't know the exact implications, because we don't really know the rewards, for example, we don't really know what those are going to look like, as well as the change of the remedial units in the coming years, there are quite a few considerations for ship owners already to be made today. And our panel will also dive a little bit deeper into those different considerations, both for the short and the long term. So I'll hand it back over to Sophie for the panel discussion now.
Thank you so much, Femke. And as we can all understand through this presentation, there is a framework, an agreed one, but also many elements that still need to be defined. And what would like to focus on next in this discussion is really what it means for different actors in the maritime value chain. And we're all digesting collectively, of course, this outcome, and we'll continue to do so in the coming months. But what we're hoping to get is a fresh insights into these questions. So without further ado, I'd like to introduce our panel members. We have three today. On the energy side, I'm happy to welcome Anthony Wang from ETFuels. Anthony is co-founder and chief technology officer at ETFuels, which is still defined as a startup, but correct me if I'm wrong, Anthony, looking at pioneering a new model for the production of green fuels. And Anthony has been following closely the developments at the EU level, but also at the IMO level, and the impact on the business case for e-fuels. Welcome. And then We'll also be welcoming Silva Hoffmann from Höegh Autoliners on the ship owner side. Hi, Silva. Silva is an EU policy analyst, and she's previously been following also EU developments, but recently and over the last years, increasingly engaging on the global policy front as well. And what are the implications of the IMO Net Zero framework also for her company. Finally, I have the pleasure to welcome also Keith Dawe from Cargill Oceans Transportations Division at Cargill. And Keith is the head of decarbonization and energy transition, and has been for a long time involved and following closely negotiations at the IMO on the framework. Welcome, Keith. We'll take this discussion in 3 rounds, and as a first set of questions, I would like to jump in straight on what are some of the key takeaways from what has been agreed at the IMO, starting with you, Silva, from Höegh. You have ordered ammonia vessels to be delivered in 2027. How do the agreed measures impact your operational choices for these vessels? And whether you'll be able to sell on ammonia, and to what extent, to what scale, from the beginning, and reflecting on the different beginning versus long-term considerations. Over to you, Silva.
Thank you. Yeah, so we have been looking at the IMO as one of the key drivers that can get us to be able to sail completely on ammonia from 2027, 2028, when we get our first ammonia capable vessels. And we had the chance to be at the IMO 2 weeks ago. Had the chance to see the negotiations firsthand. It was quite tense, but we're very, very happy that we have a framework. While yes, we agree it's not perfect, we do believe it is a big step forwards, and we're hoping it can take us further. But yes, it is not perfect, and we were hoping for a more ambitious proposal. Nevertheless, it does get us a little bit closer towards closing that price gap between alternative fuels like ammonia and fossil fuels. And while we know some things, we don't know other things. So we're still uncertain about how close it will actually bring us. But we're now getting to a point where we can make some more educated guesses than we could before. And sort of for our first 4 ammonia vessels that we're getting in 2027, 2028, it's largely a question also of price and how much it can close that cost gap. But then maybe it's also a question now to the other participants, maybe especially you, Anthony, because once we get more vessels, more ammonia capable vessels into our fleet, we will need a larger infrastructure available. So in the beginning, it'll be enough with 1-2 key ports when we only have 4 vessels, but down the line, we do need a larger infrastructure network. So now the question also remains of how much does this framework incentivize the buildup of both fuel production and infrastructure?
Thank you so much, Silva. That's a perfect transition to hand over to Anthony. Also jumping to a different fuel, because ETFuels has focused on producing e-methanol. And Anthony, feel free to, of course, react to Silva's point, but also more globally, we're interested to know how the measures impact your business case for the production of e-methanol, and is it sufficiently ambitious to give you sufficient demand for the offtake of e-fuels going forward?
Yeah, thanks, Sophie. Yeah, in general, I think we were very positively surprised. So we definitely celebrated internally, because yeah, for 6 months, the speculation around IMO, it was coming up in every meeting, customers, investors, policymakers, and we were worried that maybe nothing might come out of it at all. So the fact that we now finally have a global framework, 120 pages of tangible, workable rules, even if they aren't perfect and there are some square brackets, it's just a massive relief for us, and it's showing in the conversations we're having as well. Prior to IMO, we'd spent 3 years trying to convince people that in Europe with Fuel EU, there was now a business case for green fuels. And frankly, it was not many people cared or listened. But when the IMO result came out 2 weeks ago, our phones just started ringing straight away from customers, infrastructure providers, ports. I think everyone's still grappling or trying to figure out what exactly it means, but everyone's keen to catch up and to understand what's happening with our fuel supply projects. And so that's really promising for us. I think that the most important thing, even though a lot on the pricing is still to be finalized, is that people seem to recognize that the potential market for green fuels has just got so much bigger. With Fuel EU, we had 40 million tons of regulated fuel demand in Europe, and now with IMO, that market has just grown sevenfold to 300 million tons. We used to show our customers this chart, which kind of visualizes how much green fuel would theoretically need to be available to achieve base and strive targets, and that chart isn't a theory anymore. It's real now. And just to give an example, even to achieve base tier 1 targets by 2030, the industry would need 25 million tons of pure B100 biodiesel, and that's 50% of the market. And I think those types of messages are really, really important for investors and fuel suppliers to get going and to start delivering. So yeah, in some, devil's in the detail, a lot still to be figured out, but in terms of broader momentum, we're very happy.
Thank you so much, Anthony. And I see a trend already in welcoming, of course, the outcome of MEPC 83 and effective immediate effects already being felt. So that's very encouraging to hear. I'd like to jump to you, Keith, and to hear your perspective. You've been following very closely the negotiations and the measures that are now being agreed. What is your perspective on what is required now, and how this affects your approach to your company's technology pathways and vessel orders? Is it, as Anthony said, also do you welcome the sort of shift from theory to reality? Do you share this feedback?
Yeah, well, thank you, Sophie. I'm going to continue the trend. I share the view expressed by the previous two speakers. While it's not perfect, it's a really strong step in the right direction. And perhaps the most important part of what was agreed was this famous GFS curve that has a base compliance line that is defined to a very important point in 2040. That number in 2040 means a real energy transition. So for all the imperfections that are in the rules that were just approved, that number stands out as the kind of the center of the universe. There are a lot of things that are moving around that. There are guidelines to be developed. There are things to be agreed in the future. But that 2040 point is the center of our universe now. And it's very hard to achieve. We're not going to achieve it without the kinds of fuels that the previous speakers were talking about. But if you look at the nearer term, there's a relatively slow start and then it gets steep afterwards. And in that nearer term, it's the things that we've been experimenting with in the recent past. So people may have seen our efforts on wind-assisted propulsion and on biofuels. Both of those technologies are going to be good in the early phases of the transition. One of the things I was particularly pleased to see is that the GFS line, this fuel standard line, is centered, the maths of it is centered around the energy that is used on the ship, and wind-assisted propulsion counts as energy. So I'm delighted to see that that will be well seen in the regulation. So I think what you're going to see from people like us is a phased approach. We're going to be looking for the lowest cost of compliance at each phase, and that will see us shift from one thing to another over time. As we go into this multi-fuel future that is needed to get to those points between 2035 and 2040. So probably biofuel in the near term, and then exploring into those other fuels as the transition develops. We've already taken the first steps on that with our methanol vessels, and we'll certainly be using those. But we will be adding, it won't just be methanol, it'll be a multi-fuel future that we're going into towards those sharper decarbonisation targets later in the next decade.
Thank you, Kees. And jumping in now and maybe moving to a more detailed question on what is still to come from the measures to be developed in guidelines now. To be able to actually get these fuels that we need on the longer term, that there are still some open questions as to what the concrete definition of zero near zero emission fuels will be, as well as the framework for the rewards to these fuels. So I'm curious to hear from all of you on what you see is the perspective required from the rewards to ensure that e-fuels on the longer term become a viable option, and not only on the long term, but also as soon as possible. And I'll start with you, Anthony, if you can share your reflections on this. Thank you.
Yeah, sure. I think it's not directly the rewards, but I think for us the most important thing is a robust and strong life cycle assessment framework, or LCA guidelines. These are fundamental because the curve that Keith mentioned and the 2040 center of the universe, how you measure achieving that is all a function of the LCA rules. So I think having a robust, stringent, transparent LCA framework is number one. That means stringent sustainability criteria around direct and indirect land use change, adequate well-to-tank upstream emission factors, and a robust chain of custody and certification process, so that the numbers don't just look good in a spreadsheet, but actually drive real impact. So that's one. The second point is that our view is that the rewards should be targeted. There is some initial guidance on that with the 19 grams of CO2 per megajoule threshold, but our view is that that's still quite broad. The estimates I've heard is that the net zero fund will likely raise $10 to $12 billion per year in the first couple of years. That's a lot of money, and that support should be targeted to the fuels that need it and that have the most potential to be scalable and long-term cost effective. So having something similar like what the EU has with e-fuel specific support through the form of a multiplier or some kind of a subsidy, that will definitely be helpful. And then the final point, I suppose, is just defining how the excess greenhouse gas saving from a potential zero or near zero fuel will lead to excess rewards. So I think that the guidelines currently state that somehow the reward will be proportional to how much below the 19 you are, but I think we're still waiting to see how exactly that gets defined. As an e-fuel producer, our fuels are all very low in terms of carbon intensity, and so we would like to see that reflected in some kind of benefit. So I think those are some of the main points from our side.
Thank you so much, Anthony. That answers perfectly the question. Now moving to you, Silva, I would like to ask the same question actually, but also so that there has been a comment on one of your previous intervention on the infrastructure being available and predicting the timeline for that. So I don't know if that's something you'd like to address as well. Feel free to do that at the same time.
All right, maybe on infrastructure first. Let me just read there. Maybe I'll just stick to the wait, how long do you expect this to do? I'm not entirely sure on the timeline, I have to admit. So I think that's a question that would be best suited for our bunkering department, because they're working very, very closely with infrastructure providers on making sure that infrastructure is available in time. But I think on the other point, I need to echo quite a lot of the points that Anthony made. And then maybe focusing on the rewards, we also see this as more of a start of the negotiations rather than the end. So we have a framework, we have an imperfect framework, and we have the opportunity to improve on it. And the reward is one of the things that isn't defined yet, and is one of the things that makes it quite critical for us on how much e-fuels we can use from the beginning. And ideally, from our perspective, it would of course make e-fuels as cheap, if not cheaper, as fossil alternatives. And given that the revenue is limited, we do agree that it should be targeted. So that, for example, it is focused primarily on fuels that are scalable and are scalable long term. But throwing in another thing as well, with the Z factors and the compliance costs being defined until 2035, and we have that 2040 center of our universe, I like that term, then we have an opportunity there as well to further internalize the unaccounted cost of carbon that we're facing with fossil fuels. So yeah, we just need to keep working.
Thanks, Silva. I think that's what we'll all be focusing on doing in the coming months and years. And yes, so we've heard from Antonia on the importance and centrality of the LCA guidelines, and from both of you on the rewards that need to take into account the intensity of the fuel, but as well to be targeted and aligned with that. I'd like to jump over to you, Keith, on what is your perspective, what's required from the rewards and beyond to ensure that e-fuels become a viable option as soon as possible. Also, feel free to address the question that came on the chat that I think you've seen on the role of biofuels in that context. Thank you.
Sure, gladly. So let's go directly there. There's a bit of a tension that's developing in the people's responses here. You've got the idea that biofuels are good and efficient in the near term, but you've also got the idea that in the longer term we've got this very ambitious target. Excuse me, someone is telling. I'm going to have to turn the light back on. This tension that to get to the 2040 target, we're going to need large volumes of fuels that will meet the sound LCA targets that Anthony was talking about, and that's a tension that somehow needs to be resolved by other mechanisms that are going on within the net zero framework. We need large volumes of sustainably scalable fuels to deliver that 2040 target, and biofuel isn't going to achieve that on its own. We spoke a little about the RUs, but the reward mechanism for Z and Zs. So certainly I agree with the comments that were made earlier. I would also focus on the idea of this generation and trading of surplus units. That's another place where the IMO can focus its attention to make sure that we get those sustainably scalable fuels into the market. And it's important to do that now. 2040 might feel like a far away, but when you consider what has to happen between now and then, that's quite a significant scale up. And what we want to see as soon as possible is actions to bring the costs of those fuels down before we need to scale them up in very large volumes. That's the way that we get the most efficient possible transition. So what we're optimistic about, what we're hoping to see, is that as the IMO develops its regulations and the guidelines that support what they're doing, that they do that in a way that focuses attention soon on getting cost down efforts for those fuels that can be scaled sustainably.
Thank you so much, Keith. There has been a few questions or comments on the chat, so I'd like to briefly maybe refer to some of them and invite you to comment on some of them. One of which is about, the trade-off between the chance to improve the framework, one further policy details in the guidelines, etc., but also going forward in future reviews to make the policies more stringent and aligned to the needs of the sector, but also the fact that this will likely prolong the uncertainty on the different criteria to make the business case for ETFuels happen. I'd like just to hear a general reaction on where you stand on this sort of existential question of where does that leave us, and then maybe a couple of others that came up were on the link with FuelEU. If you have any reflections on, the interlink that we can expect between the EU regulations and the new global framework. This is very much work in progress. The EU itself has said that it would only revise if the IMO would bring a more ambitious framework, and there is a timeline for that in the next years, not only for the EU, but also looking at the trading system. So any thoughts on that would be welcome. And finally, there was a question on what is your expectation of the LCA guidelines, to what extent it will be fully revamped or just mildly updated. Feel free to jump in on any of this. Maybe Anthony, also, if you want to go back to the question we had on the infrastructure being available and by when, that would be great. We can start with you.
Yeah, I mean, on the infrastructure, I'm not sure if the question is referring to the production infrastructure, the bunkering specifically. I mean, I think our view is that the bottleneck is on the production side. These projects take a long time to develop, 6 to 8 years, to get the plant producing. Then moving it and bunkering it, at least in our case with methanol, that's not typically a constraint. Plenty of methanol tanks at most of the ports where we're looking at, and on the bunkering side, existing barges can be retrofitted for relatively cheaply. So we don't see that as a bottleneck. But yeah, so the fuel supply is really where it's going to take a while. And 6 to 8 years means that to be up and running and to meet some of those targets that have been mentioned before means we really have to start now. So maybe that's on the timeline side. Would you like me to comment on the Europe and some of the other questions around?
However you feel comfortable. I'm sure Silva might have some insights on that too. But maybe on the LCA guidelines, if I know that's a topic close to your heart as well. What you foresee happening?
Yeah, I mean, maybe a couple of thoughts. I mean, one on LCA, it's not like we've never done this before. I think there's many precedents and many very good ones. I think the EU's on a great job, and so we don't have to reinvent the wheel. And I think the broad kind of framework is there. Now it's a matter of filling in the numbers, which will be a negotiation between the various stakeholders. But I think it should be very doable. And I don't think the uncertainty until we get the final numbers is going to be unmanageable, because we kind of know the direction of travel. So that's in general. I think on FuelEU, because the European framework obviously is a precedent, maybe couple of points there. I think one thing that's important is that what we're finding is that a lot of our customers that prepared well for FuelEU are now better prepared for the IMO, because even though there are differences, there are also many similarities. And I think especially when it comes to compliance trading or surplus unit trading, that concept was introduced in FuelEU. And I think for the shipping industry, that was quite new. But now with the IMO having that as a major mechanism for compliance, I think it'll just become the norm, right? I think everyone's going to have to get familiar with how this works, and I think that works in favor for both schemes. As to whether it'll stay, I'll defer into the Commission on that. I think it'll be relatively hard to. I mean, you can make the case, both ways, whether it's more or less stringent. I think it'll be hard for the Commission to get rid of taxes that are now generating income, but let's see. And then I think I think those are some of my main comments on the questions.
Thank you, Anthony. I wonder, Silva, if you want to jump back in from there on the last
Yes, happy to. Maybe on the infrastructure side as well, we are very confident that we will have some bunkering available in 2027. And there we're looking primarily at Singapore and the ARA region. And then any more details, I'll have to check with bunkering. On the EU, I guess sort of the EU has two parts. The EU has the EU ETS and Fuel EU Maritime. And now that we don't have a carbon price at the IMO level, we see it as quite likely that EU ETS will remain. For Fuel EU Maritime, I agree, they can be either more stringent or less stringent. The Z factor reductions are more stringent at the IMO, while the penalty or the compliance cost, if you pay, is more stringent in the EU. So we'll have to see how the EU will tackle that, whether they will say, okay, we will adjust our targets, match the targets of the IMO, and then anything you pay to the IMO will be subtracted from what you pay to the EU if you decide to pay the penalty. But all of that is still very much in the air, and I guess we'll first have to wait and see until October once things are finally adopted, and then we'll have to see what the EU does with it, because I doubt that they will start working in earnest on how they want to change their regulation before it's finally adopted.
Thank you very much, Silva. Anything you'd like to add, Keith, on any of the questions that came up?
Yeah, look, I share a lot of the views expressed. I think the point that Anthony was making about the time and the lags between the demand signal and the infrastructure actually being in place is very important, particularly when you see the pace of decarbonisation that's going to be required to meet this baseline. So I think we're left with quite an important question. Do we just look at the IMO's framework to drive this transition, or do we have to think more broadly about other actors who will support that framework, nations or regions or ports? And I think it's pretty clear that it's going to take a concerted effort across all of those groups to make this happen at the kind of pace that's needed. It isn't just a question of covering costs, it's a question of taking some significant risks to put all of this infrastructure in place. And if we just look at the IMO plus the private sector, it's unlikely that that's going to happen at the pace that's necessary to meet that 2040 target. So yes, we're optimistic that ports and nations will support some of the risk taking here in order to make that transition happen.
Jump back on this one, actually, also linking to the last round of question I had prepared for you all, on the need for concerted efforts. And Keith, you mentioned yourself before that one of the key challenges is to get the cost down in the gap between fossil fuels and green fuels, and to get it done soon rather than later. So bearing in mind other development that are needed, as you say, from national governments, but also from other actors in the maritime space, what would be your wish list? What do you see needs to happen in addition, complement to the IMO framework that we all hope will be adopted in the autumn? And we can start with you, Keith, if there's anything you'd like to add to the point you just made. And
sure. Look, I think we're already seeing a lot of that. You see some of the leading ports around the world who are already taking big steps to try and enable these future fuels to come into place. We see that in Singapore, in the ARA region, and in other parts of the world, and we need to see more of that. They can make big difference to the risk profile of an investment. So it's already happening, and I think with the measures recently agreed, I think we'll see a lot more of that coming. So I'm optimistic. We're on a good path.
thank you. We all welcome optimistic notes. Anthony, jumping to you, what do you see is needed from elsewhere to beyond the IMO to deliver on the objectives in the strategy?
I think I mean, look, I think from our side, the regulators have spoken, and now it's kind of time, for the industry to deliver. And I mean, just to re-emphasize the point on timeline, that there is a mismatch between when the fuels are needed and how long it takes to develop them. And I think it's just really important to start today. Yes, 2028 might feel like it's still 3 years away, but it's really not. It's kind of around the corner. We've got the MEPC in October, then the guidelines in 2026, then data collection starting in 27, and then the 28 first year of operation. So any vessel being ordered today will be exposed to these regulations. And I think the industry just really needs to get comfortable with that, understanding their exposure, their risk exposure. We know that doing nothing isn't really an option. Understand the compliance options, understand the benefits around surplus trading and the reward factors. And just the fact that fuels will be procured in quite a different way going forward. The e-fuels market is relatively new, and most of the volumes get pre-sold years ahead of the first molecule delivery. So I think it's important to really start having those commercial discussions and to think through the contractual considerations to make these projects happen. So that's kind of the work that's cut out for us on the private sector side. But I think that the IMO has been a great boost to those discussions, actually finally getting some teeth and starting to happen. So we're very excited about that. And then from a regulator kind of policymaker perspective, I think keep doing what you're doing. I think the obviously there's still some work to be done. We're very happy to see what's happening at the ports. Singapore launched their first tender for methanol bunkering. Some of the European ports are looking at the same things, and I think now it's just a matter of working through some of those details. But yeah, agree with Keith that it's I don't think there's anything particular in terms of ask there.
Thanks, Anthony. I will ask you the same question, Silva, in terms of what you see is needed in addition, but also what would be your key ask to fuel producers, let's say, or other actors in the value chain based on this new regulatory context?
I think going back to the point of that the fuel market will look very different. We seem to have a bit of a mismatch between what fuel producers need and what we ship owners need. So we are not one of the big players. We have about 40 vessels. And for us, it is very, very hard to today commit for a 10-year offtake agreement with large volumes, because we're just, in a way, we're too small. So we think there's a real chance for governments as well to play a role, to de-risk projects, to give a little bit more certainty there. And that could be through double-sided auctions, as now being pioneered by H2 Global, or the EU later this year will launch their Sustainable Transport Investment Plan, where they're looking to specifically focus on scaling up production and uptake of zero-emission fuels in the maritime and aviation sector. So if we, in a way, if we manage to match ourselves a little bit better, then hopefully we can do things sooner rather than that everyone is a bit in a waiting position.
Thanks, Silva. Yes, so what I would summarize is things are happening already, but we need more and more on the efforts that are being put forward across different actors, being ports, regional and national governments who can support the objectives of what the framework will try to achieve, and yeah, so more from regulators, more from ports, but more so from industry participation and collaboration. I'd like to maybe end on going back to my existential question that came in actually from a comment in the chat on the sort of place where we are now, waiting for adoption, but also looking forward to more work on guidelines and for future reviews. So what's more important in your view? Is it to get higher ambition as we go forward and the framework is adapted, detailed, or to ensure stability and certainty of the rules. Maybe a last word on your own thoughts. That question would be useful before we close up. Thank you. And I'll start with you, Keith. I can see you're warmed up.
Look, I think the most important thing in all of this is the LCA. If you have a sound LCA, everything else circles around that. We've already got that GFS number that is the rate that we're decarbonising. If we have a good LCA, then things follow from that. So I think that has to be everyone's primary focus. Everything else can change. You know, if you make a mistake on the guidelines, you can adjust them. But if you set the industry on the wrong path with an LCA that isn't doing its job properly, then the industry is on the wrong path, and that's a problem that will last for quite a while. So we've got the economic measure, we've got a really good decarbonisation trajectory, and now we need the LCA to make sure that we all focus on doing the right thing to get there.
Thanks, Keith. Silva, any reflection?
I guess it's a difficult balance to strike, but I might rephrase it. I would say we need stability, that we won't roll back on measures, with the stability that we will get more stringent measures in the future, so that we have a base. We will not go back on the base, but we will continue working towards a net zero future.
Sustained stability. Anthony?
Yeah, echo the stability point. I think there's one of the points that was agreed was the revision process, which is framed as kind of a way to keep the remedial units in line with the real compliance costs. And obviously that's great if it gets used well, but it also opens a bit more uncertainty around how does that look in the long term. But yes, definitely want to make sure that there's no rolling back of the regulation. That would be not very helpful.
Yes, that was an important point of discussion, whether there should be a backsliding clause, and that has not been put in. But of course, we all hope that there's a shared ambition to only go higher from here. And based on your input today, I think I leave quite optimistic and at least encouraged and motivated by your own engagement and commitment to delivering on the measures. We have only a couple of minutes left, so I would just like to take the time to close off and thank you to the panel members for joining us. It's been a real pleasure and very insightful to hear directly from you, even though it's still early, shortly after the adoption of the measures. We'll be sharing the slides that my colleague Femke presented earlier, and the recording with the participants who signed up to the webinar. And as I said before, the webinar will also be available publicly on LinkedIn. From our side, on the Getting to Zero Coalition front, we will continue to engage with our members and beyond, with stakeholders in the public and private sectors on what are the implications of the measures, understanding and trying to get a collective understanding of that. And we'll do that through numerous activities that we have planned for this year still, but also by staying closely involved in the IMO process in upcoming meetings. And generally, we just look forward to engaging more broadly with you. And so any participant who have follow-up questions or comments, feel free to reach out. The contact of my colleague Femke is there. Feel free to reach out to me as well. And thank you again. It's been great to share these views today with you. Bye.
Thank you.
Thank you for having us.
Thank you.
Thank you.